So 2024 stock market performance, as measured by our market indices, it has been a year of decline for us. So the stock market did fall in 2024. As a matter of fact, our major index fell about 12% year on year. So it was a challenging year for us.
Hi, welcome back to my channel, the third Bara. I hope that you will get value in what I have to present in my post today. So, the previous video clip was Miss Eva Mitchell, CEO of the Trinidad Stock Exchange, and she was basically explaining that for the past year, the stock market has been slowly declining, and you can see that from my portfolio as well. It was slowly declining. And she's also hinting that now, just like in a sale in a store, now may be the best time to start buying in the Trinidad Stock Exchange. So, as we can see, my portfolio rose a little bit today as compared to my last video. My portfolio now stands at $495,146. I still have my 11 holdings. I haven't bought or sold anything just yet since I start posting videos, but don't worry, when I do, I'll be sure to post about it. Once again, my estimated dividend is maintained at around 27,717 for the year. So the question arises, for some people, this 495,000 looks like a large value, and they wonder, my salary is small, I don't have money to invest, I can barely make ends meet as is. What I want to do in this video is explain a systematic process which you can implement right now in order to free up some cash so that you can invest in your future wealth. So let me explain. So if you remember, in one of my first posts on this channel, I explained the capitalist system that we are currently living in. And most people occur here. They get their money, their salary from their job, and they spend all of it in consuming. However, what I would like to explain to you is a way where you can free up cash and become an investor. So let me explain. So how this system works is that when your salary comes in, you split it into three separate accounts or three separate bank accounts, and I'll explain. For every dollar of income that you get, you take 10% of that income and you send it to a savings account. That savings account could be something like unit trust, but something that's not easily accessible, where you would not be tempted to spend it on your consuming. You also take 15% of that income and you send it to a brokerage account. That way, what's left in your bank account is 75% of your income, and that is what you will use to cover all your expenses. So yes, you heard that right. I am telling you to live on 75% of your income, but that's just for now. That is how you organize a system so that you can ensure that you're building wealth for the future. So let me break this down even further so I can step through this. So as I just said, for every dollar that comes in as a salary, 15 cents goes to your investments, let's say your brokerage account. 10 cents goes to your savings account, let's say for example a unit trust money market account, and 75 cents stays in that bank account. So let me start with the savings. Economics economists recommend that you have at least 3 to 6 months of emergency funds, something that's easily accessible and liquid just in case life happens, and life emergencies does happen. You may have a medical emergency, you might have an emergency repair on your house or on your car, and you need funds that are accessible so that you can address those emergencies. So, we recommend when you start working, you're 22 years old, you come out of college, come out of university, you just started. The first thing you need to do is start building that emergency fund. This is what you do with your 10%. So you give yourself that flexibility so that any of life emergencies that comes up, you have the flexibility to access this cash without going to the bank for any sort of loan or credit, and to be able to fund those emergencies. However, that's just 10% of your income. 15% of your income goes in investing in your future. So you open a brokerage account. When your monthly salary comes in, you take 15% out of that monthly salary and you let it rest in your brokerage account. What are we going to do with that money? Those funds are meant for investing in your future. And when I say investing in your future, I'm talking about for the next 10, 15, 20, 30 years. You are never going to have to touch those investments. And as you saw with my portfolio, as those investments increase, it will begin to start paying you dividends and returns. So suddenly you will have your salary income and then a residual or passive income starts trickling in as your investments increase. But this only takes place over time. And during that time, you're splitting your salary into 15, 10%, and 75%. You have to be very disciplined when implementing this program. That is how you build wealth for the future. So, in these investments, you will have different options. In Trinidad, we have mutual funds, or you can be like me and be a do-it-yourself investor and invest directly into companies that you're familiar with. Those are two different paths based on the type of investor you are. In a future post, I will explain why I personally do not like the mutual funds that are available in Trinidad, but the decision is yours. At this point, once you invest, that's all that matters. In this segment here, this is your lifestyle expenses. This is your mortgage or your rent. This is your clothes. This is the gas. This is the electricity bill. This is the phone bill. This is the internet. This is going to FET. This is playing carnival. This is all your life expenses. And yes, you will have to develop a budget. And your budget will have your minimum needs, and then your wants will come after. But when you finish tally that list of your needs and wants, it can only go to a maximum of 75%. This 75% is a maximum spend for your budget. For the savings, this 10% is the minimum. 10% of your salary is the minimum you will put in that account until you reach your emergency funds limit. Once you reach those emergency funds, let's say you have a robust 6 months of expenses that's covered in your savings account, then you can divert this 10% to your investments. So in total, when you reach that 6 months of emergency funds, you can then now divert 25% of your income direct towards investments. and that will make you get that passive income snowball rolling and slowly growing over time. The more you invest, the faster the passive income becomes. This is the simple system that I use personally. I have found that it is very effective in terms of managing your lifestyle expenses and as well as sustaining for your future wealth. This is the way the rich 1% do it, and this is the way I recommend that you do it as well. This is the way I do it. So how does it all work? Okay, so my income is coming in, I'm building my emergency savings account, and I'm also diverting a minimum of 15% to my investments. But where will that lead me? Let me explain. Let's say you're 22 years old, you got a job, $9,000 a month. So that 15%, you're now going to channel it towards your investment. So what's 15% of 9,000? That's 1350. Oh, before I start with the calculations, let me just reference where I'm taking this compound interest calculator. It's from investor.gov, and you can go to the website yourself and check it out and play with it, play with the numbers, and you will see the benefit of investing for the long term. So back to our example. So you're making 9,000 a month, and 15% of 9,000 is 1350. So your initial investment will be 1350, and you're promised that you're going to make a minimum of monthly contribution of 1350. So the length of time in years. So let's take this to 30 years. You're 22. Let's see where you will be at 52 years old. So now there are some assumptions to this. The biggest assumption is that when you start working for 9,000, your salary is not going to change. It's going to be maintained at 9,000. In reality, your salary will increase over time. But let's deal with the minimum because we know what value we calculate here. In reality, as your salary increases, that 15% minimum contribution will also be increasing. So you'll be putting more than 1350 in your account. But for the sake of this example, let's go with 30 years, and our estimated interest rate is a conservative 5.5, easily achievable by investing in the Trinidad stock market. So we'll put no variance, so because we want to see what will be your value of your investment portfolio growing at 5.5% over 30 years. We will compound those returns annually, and let's click on calculate and see where we get. So based on the calculations, at 52 years of age you will have a nest egg of $1,180,183.08. That's a very large amount. And if you take that amount and you use my dividend yield from my own account, let me just reference that. So currently the dividend yield I get from my nest egg of 495,000, I get a 5.6 yield, which means I'm getting 27,000 per year. So going back to our calculation, let's see if I put this number in my calculator. Let's see what we have. So we have 1,180,183.08, and we multiply that by 0.056, which is the 5.6 dividend yield. That gives me a figure of 66,090 per year. So let me divide that by 12. That gives me a dividend payment of $5,507. That's $5,507 additional that's coming into my bank account tax free at 52 years old. And that's the bare minimum because, as I said, as you age, your salary will increase. So that 15% that you'll be contributing monthly will be bigger than the 1,350. But let's deep dive into this figure. This 1,180,000, that's what the size of your nest egg will be. But what did you actually contribute? Based on the values here, you actually contributed only you only contributed $487,350. So out of that nest egg of over 1 million, you contributed less than half. The other half is your army of dollar bills working for you. That is the power of investing. And that's the power of investing over the long term. You are putting your money to work. You are not working for that. And that's where you have to be. And that's where I aim to get you. This is where we all need to be. As an investor, that is our aim.
This presents an opportunity for investors because in the face of a declining market or lower prices, it is the perfect opportunity to actually buy.
Mitchell said that the TTSE has been urging young people to become shareholders in the companies they patronize.
So, what did we cover today? I showed you a simple system, the 75, 15, 10% rule, where from day one, you'll be able to allocate 15% minimum of your income towards investing. And you just heard the CEO of the Trinidad Stock Exchange state that now is the best time to start investing. Why? Because the market is at a discount. You're going to get valuable companies like what you see in my portfolio, for example, at a very attractive price. That means you're going to get higher dividend yields, you're going to get a higher return on your investment. The time to start is now. It's the best time. You don't need to be perfect. You have a lot of time. As you can see with my compound interest example, we are talking about investing constantly over a period of 3 decades. So you have time. So if you like the information you heard in this video, please subscribe, like, and hit the notification button. I'll see you guys next time. Thanks a lot.